Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is May 5th, Tuesday. Happy Cinco de Mayo to you, folks. Hope you guys have a good, safe day today. Hey, we just got a couple economic news releases scheduled for today. We'll start off with the trade deficit for the month of March. So we had a negative $35.9 billion in the month of February. The forecast is supposed to widen to 43.5, and it widened a lot further than we anticipated to a negative 51.4 billion. This is kind of startling the markets today because with that big of an increase, a lot of this being attributed to the West Coast labor disputes we had earlier in the year. But the biggest concern on this is with the very measly number we had for the first quarter GDP at 0.2%. This could look like it could potentially put us in a negative. And what would a negative look like? Basically a recession. Technically, it would be a recession. So this is a bit of a concern for a lot of investors as they look at this and see what. So there'll be a lot of, and needless to say, there'll be a lot of anticipation to see the next revision of the GDP numbers, as the second one will be coming up this month in May, and the final revision will be coming up in June. So those will become even more important as we get to the final numbers here. ISM non-manufacturing, also the services, ISM services here. We had anything above 50's expansion, so we had a 56.5 back in March. It was supposed to continue that in April, and it actually went up a little bit more, so 57.8%. So a little bit of mixed bag of technical news here. And then on top of it, we had stock markets down because the technicality, mostly on the news regards to the trade deficit, but we also got some mixed earnings reports. Now, over in Europe, the European markets are being a little bit rattled, a little bit because, again, concerns over Greece. Because if you remember back in February, all they did was basically postpone their payments and possible the bailout money that they had, the austerity measures that they went on to, that there would be that they went default basically. Now, all it did was moved it over to right about this time period, and we're approaching that period again. And then, of course, the concern that maybe they default. So expect that maybe even come over into our markets again as they start thinking about it. It hasn't yet. Our markets aren't quite thinking about it yet, but it could, especially now if there's concerns that we could have a technical recession, and then European markets, everything else, it could it could even have that snowball effect. Bond market also taking quite a bit of big beating today. We actually jumped down, not jumped, we actually even nosedived even further. So yes, we had pricing for the worst, and we even had worse pricing today as the bond market continued to worsen, which drives interest rates up. So interest rates have continued to go up, as you can see here over the past week. How much interest rates have risen, how much of a drop from the 102 level all the way down to the low 101 level. So pretty big drops here in terms of pricing for interest rates here. All right, folks. Hey, I'll just kind of continue what we talked about in regards to some of the new programs we rolled out. And this week we'll talk about our Investor Advantage program, which I'm a huge advocate for. This is a true mortgage for real estate investors. Essentially what they are looking at is they're looking at the subject property's cash flow to determine the debt to income ratios. So we're not looking so much to qualify the borrower, but we're looking more to qualify the subject property's cash flow of the property, kind of like similar to a commercial loan for investors. If you have a lot of finance properties, not an issue. We don't care about how many finance properties, unlike the conventional loans out there with this program. Now, our investor will take a maximum exposure for each investor up to 10 properties. They have a max loan amount up to $1 million on each property. So in theory, you could have 10 loans with them up to $10 million on this program. Cash out refinances are allowed. So if you have properties that you want to or have no loans on there, want to take out money and buy new properties, that is also welcomed. So it's a great new loan program. This is also allowable for foreign nationals if foreign nationals want to participate in purchasing, acquiring investment properties here in the U.S. This is also allowable for foreign nationals here. So a lot of great stuff on this loan program. We're very excited about it. If you guys got any questions or want more information, please feel free to contact me through my profile. I'd love to be able to get you more information. But this is something that was just released and it's rolled out there, and I think real estate investors are going to love this program. Have a wonderful day. Thanks so much for watching. You guys have a great day, and we'll see you guys tomorrow. Take care.